The Dipan Mehta joining us. Dipan, good morning. Dipan, before I come to you on markets and yesterday's second half action, I want to get your comments on something very interesting. The RBI governor last evening mentioned, and this RBI governor, he's been recognized for the amazing work we've seen done by RBI in times of massive crisis, very well acclaimed by global agencies of central bankers, everybody. And we all know by in our hearts how they have actually managed growth versus containing inflation and not throwing money in the economy as some of the other central banks have. Now, when RBI governor comes and says that we are at a structural shift in growth, which means that we are at the cusp of that shift, which means we are moving towards a 8% kind of a growth on a sustained basis. Now, I want to talk to you about what a decently high growth on a sustained basis and a moderate inflation environment can do to portfolios who are running with focus of 5-10 years kind of a horizon.
Yeah, good morning and thank you for having me on your show. Yeah, sure. So very positive statements coming in from the RBI governor. And he's just reiterating, I think, what all of us have been experiencing and what all of us have the same view that this really is the decade of India. And with a lot of fundamentals in place and a lot of stars completely aligned, demographics, political stability, overall upcycle in capex, good quality banking sector is in extremely good health. So there are many positive factors which should result in sustained growth rates, and a higher GDP growth rate eventually does translate into higher corporate profits. But the key question here is that how much of it is discounted in the stock prices, because at present the valuations are really, I would say, on the richer side, and a lot of the future growth prospects seem to have got discounted, but earnings can always surprise on the positive side. But nonetheless, I think it is great, I would say, forecast coming in from the RBI governor and does inspire a lot of confidence amongst investors as well as corporate India.
Now let's come to yesterday's big, this is the second time we really saw big blowout in financials in a matter of 10 days. It appears clearly that, FI selling may have troughed out now and they are repositioning. Are you getting a sense too?
No, I think that FI selling is still quite volatile, and their view has not changed. They do find the stocks are expensive at this point of time. They have the choice of investing in several other markets. So from that point of view, it's difficult to predict how they will react to India at these valuations. But I think from time to time, you will have such days when they do have positive flows. And those are the days you will find that the large cap stocks will do exceptionally well, because those are the ones that they really are targeting. And more than, I think, FI buying, even FI selling, if it stops in some of the large cap index stocks, local money will ensure that the stock prices move up higher for those really mega cap stocks, the likes of banks, IT companies, Reliance. So it's not just buying, even cessation of selling can have a positive effect.
Even have you analyzed CG Power or even Tubes, the parent company which holds CG Power, and the stuff which is happening in these two?
No, see, we have been covering CG Power, and it's one of the greatest value creators and a superb turnaround story. Kudos to the Tube Investment Management for making such a fantastic acquisition and creating so much wealth for Tube Investment shareholders. And of course, this is one company which is in the right place at the right time. We are seeing a massive pickup in capex, private sector as well as public sector, and the company's brands, the company's position in the industry is really strong. Demand for electrical products, electronic products has been looking up for CG Power. And now I think they're going in for a lot of expansion in new age technologies as well, like EV. But a lot of the positives have got captured in the stock price. Valuations are extremely rich for a typically cyclical business or an engineering company. So at these levels, I think it's best to remain invested if you have been sitting on profit. But from a fresh investment perspective, I don't think that the risk return profile favors you.
To get in a sense, Dipan, from you, with respect to the number of block deals as well that we've been seeing, a lot of promoters as well selling out, just anything in particular that has caught your eye or what you make of how investors should read into this?
No, I think that these are signals, that so much of promoters selling, even selling by MNC promoters, clearly shows that they find the valuation extremely stretched. and liquidating part of the holdings, use that money elsewhere, be it to repay debt or just personal consumption or just strategic cash, clearly shows that we need to be a bit careful at these valuations. And it's not a very positive sign from that point of view, the supply which keeps on coming. And mind you, the biggest supply is still to come from the India's largest promoter, that is Government of India. And once they start selling PSU stocks, one needs to see where the stock prices settle down.
Mazagon doc as well with respect to the proposal for granting Navratna status. So that's something as well that we'll be watching out for. And there's a number of other newsmakers as well that we will be tracking. But in particular, Dipan, wanted to get in your take because so much happening with respect to some of these new age tech companies like a Swiggy and a Zomato. There has been pretty robust growth momentum that we have witnessed. And it seems to be a very divided view when it comes to even investing or partaking in these growth stories. Where is it that you stand?
Yeah, it's a good observation that there is a lot of dichotomy
Yeah.
on these stocks. Some feel that they are the new age stocks and should give sustainable growth rates and create value, and there are others who try to measure them on traditional metrics and feel that they're extremely expensive. So only time will tell who's right. But I would go with the fact that selectively one should look at these new age tech companies. They have got strong moats, strong brand, and very aggressive managements which can scale up the business. So I would say selectively one should look at these companies. We are positive on Zomato, although quite, I would say, disappointed with the new acquisition which they are pursuing. If it does happen, that is the ticketing business from Paytm. But nonetheless, I think the business is shaping up pretty well. And then there is even PV FinTech, the parent company of Policy Bazaar. So that's one segment, and the manner in which they sell insurance policy, which is quite impressive. And also, I think they're also getting solidly into the black sooner or later. So yes, there are, I think, a few interesting companies, and more will get listed as well. But I would say that it's better to have kind of a basket of these companies, 3 or 4 stocks, and remain invested for an extended period of time, like 3 years, 5 years, even 10 years, because these companies will take time to really fructify and create a lot of value, but they are counter-cyclical, and if things turn out well, then they could be great value creators as well.
Meantime, Dipan, we'll be getting in a discussion later today on the real estate space as a whole, and it seems pretty optimistic in terms of the kind of observations with respect to the residential markets, commercial market outlook as well. But if one had to play it from a stock market angle, how are you looking at the real estate space as a whole? Where is it that you're finding promise?
No, I think it's better to be a bit cautious on the real estate side. They've been having a tearing rally, and a lot of sales have taken place, pre-sales have taken place, the fundamentals have improved significantly. But these and of course the real estate cycle is really on the upswing. But I think a lot of the positives have got factored in, and one could easily expect slight correction in deals as well as prices, even in a upcycle in the real estate industry. And valuations are certainly not cheap. Of course, every quarter, the net asset value or the total book value of these companies tends to go up by 10-15% because of new projects. But look, these stocks have given fabulous returns. And as I said, I think at this point of time, as is the case with a lot of other stocks, the risk return profile is not in your favor. So I just wait and watch and look for a correction, 15-20% correction or so, may just provide you with some margin of safety.
By the way, after IREDA, it's Mazagon, which has been approved for the proposal for a grant of a Navratna status. Dipan, in this entire defense PSU pack, just wanted to understand, I know you've, advised caution many a times, but the stock prices, of course, seem to be doing a different thing altogether, as is the case with news flow, be it order wins or now for a Navratna status for Mazagon. How is it that you would position or recommend new investors who are looking at defense as a pack, who've completely missed out on the last year and a half or two of the rally within this pack, to go about it?
If you missed out, then just stay away at this point of time. Look, even bull markets, one should expect corrections, and corrections are a good time to load up on stocks which are done exceptionally well, and the future also is very good, very positive because of order wins or earning visibility. But in a charging bull market, in a running train like this, it doesn't make sense to enter. So I would just say wait and watch, keep them on your market watch list. As I said, if a correction comes 15-20%, 30% lower, those are good entry points. It could also be that one or two soft quarters may disillusion the investors, and that could lead to a correction as well. Those are all signals that you could look at buying into these companies on a long-term basis. But at these levels, with 50, 60 times trailing 12 months price to earnings multiple, I don't know whether you can really have a great return buying into such companies at these levels.
Dipan, what are your thoughts on some of these pipe companies? Not the Astrals of the world. I'm talking about metal pipe companies. I mean, barely there was, Ratnamani and some others. Now you have half a dozen pipe companies, and new avenues are opening up. Earlier it was just about transportation. Now oil and gas, water. Any of those names you like or have in your portfolio?
A disclosure, we are invested in APL Apollo, and that's been a great value creator. Their branding strategy, their focus on construction sector, and other various initiatives which they have taken has played out very well for them. But look, again, valuations are very, very rich when it comes to a stock like APL Apollo, and last quarter results were also quite disappointing. So from that point of view, I just want to wait and watch these pipe companies. I wouldn't advocate buying into anything at this point of time.
Okay, not recommending buying into any of the metal, pipe companies at least. Is it that you're looking at the telecom space? While, of course, there is that impending tariff hike, which everyone's talking about, seems like the stock prices have already moved in anticipation of that. And then, of course, there is the ongoing spectrum auction as well. Dipan?
Oh, sorry, this question was for me?
Yes, that's right.
No, I think that the spectrum auction is really a non-event. And within the telecom space, what we're looking at is how are they going to raise the tariffs because they're waiting for the elections to get over. And I think that 10-15% tariff increase in the immediate near future and 15-20% over the year seems to be on the cards. And because of that, we have seen telecom stocks scale to new highs. Fortunately for Bharti Airtel, which is the only stock that we feel has got good potential, is that a lot of the capex is over and done with, so free cash flow also should improve. And also, I think a lot of value is being created in the subsidiary companies in the Africa business as well. So generally very positive on Bharti Airtel. And if we are surprised by the kind of tariff increase that the company does take, then I think you could have be surprised even on the profitability, because a lot of the businesses has got a lot of operating leverage, and increase in revenues can flow a lot of it can flow to the bottom line.
Dipan, thanks so much for taking time out and joining in, sharing your thoughts with us on the show.
If you like this video, then like, share and subscribe to ET Now.